Somebody type a 1 in the chat if you guys can hear me.
Yeah, we can hear you.
Okay, cool. All right. So, anyway, I am going to be doing fundamentals a little bit different because I'm on the road. So, I'm just going to tell you guys to visit the Forex Factory calendar. Today, we had important news that came out from Europe about the economic sentiment, and then we also had some U.S. news that came out today. The news that came out today was pretty mixed, and the economic sentiment news that came out from Europe wasn't all that great. Tomorrow, typical U.S. news, jobs, and then we have important PPI, and then core PPI numbers that are going to be coming out on Friday. But we do have several orange and red folders from various countries coming out. So all of these folders that you guys are seeing now, they're really important because it's September. So something I didn't really stress at the beginning of the month, like last week on the Zoom call, was that typically, historically speaking, you can go and pull it up for any year in the last given, 5 to 10 years or so. September is typically the worst month, the worst performing month for the markets. And it's because of a few things. Coming up on end of the fiscal year, budgets, it's the end of the third quarter. It's, a big time for the Fed. It's people coming off that summer high. People typically around this time of the year are reassessing their portfolios. So it's a lot of stuff that happens around this time of the year that just doesn't make September ideal. But that's not to say don't trade September. It's just to say be vigilant when you are trading in September. And then a couple of other things. So I have all of this material for you guys to start stocks and start the process of really looking into how to build a great foundation for researching stocks and then also putting stocks into your portfolio. Hopefully, I'm tired at this point. I'm almost tired of saying it, but I just feel like it's just going to be a Zoom call where I haven't planned it, because every Zoom call where I plan to do something, it just never works out that I'm able to do it. So it's going to be a random Zoom call. I would say tomorrow, I would say Friday, I would say Monday, but I just don't know. The OR schedule is just kind of crazy, but we are going to start doing that. We're also going to do a lot of mindset, thought process stuff, because trading stocks is, as I've said before, is different from trading Forex, because you have to be in it mentally for the long term. I was looking at some charts last night, and it's going to be some research stuff that we go over when we start doing looking at performance. If you take a 10-year period in stocks and a 10-year period in Forex and compare them side by side, stocks are typically going to be the best performing asset when you look at Forex and stocks side by side. But what that should tell you is, if you look at it in bits and pieces and in chunks, and we're not talking about shorting the market, we're not talking about selling in Forex, being able to buy and sell on both sides. We're talking about strictly growth in the markets. When you look at assets, you have to know if it's a short-term asset or if it's a long-term asset. And then emotionally, you have to be connected. We tell you guys don't get emotionally connected to your Forex trades, but with stocks, you need to have a connection with whatever you're owning, because at the end of the day, you're owning it. It's like buying a car. You don't just buy gone tomorrow. You buy a car, love it, you take care of it, you nurture it on it. That's how you are going to have to look at your portfolio, because it's not going to be something that's short term. Literally, it's going to be a year minimum, ideally 3 to 5, max, we're looking at like 10 to 20 years. We'll talk about the steps for you guys to be able to open up accounts for your kids, how to start funding that account so that, by the time they're in their teens, they literally won't have to ask you for allowance. They won't have to ask you for money for a car, college tuition. Like, they'll just have it in that account available to them. Also, like I tell you guys, to find people who are doing things that you want to do and are strongly aligned with you, because we're also going to be talking about how mentors are going to be a very important part of keeping your portfolio and then also keeping your mind stable. So these people don't necessarily have to be someone that's strong in finance. It could be someone who is a really good friend, someone who mentally they can keep you on track. They can, help you through your day-to-day issues and things that you might have, because having a clear mind and just being able to trade and, not have to stress and worry is going to be super important. Speaking of mentors, I was on a call last night with one of my mentors, and some really good information was given out. So Friday, regardless of whether or not I'm like at home on the computer or wherever, even if I'm at work, I'm just going to have to step out for like maybe 5 or 10 minutes and just give you guys the information. I was just told to wait, but I'll give you guys the information, and then it's going to be something that's truly going to be a way for you guys to start building your streams of income, way for you guys to start putting your kids on, and it's about just building the basics, building the fundamentals of investing, period. Not just stocks, not just Forex, but for everything. So, we'll do that. And there was something else. Speaking of, like, when I was talking about mentors, we'll talk about this a little bit more, but the really important thing about your mentor is that you can call your mentor on the phone. Don't call somebody a mentor, especially if you're going to use them as a mentor to help you stay mentally sound with your stock portfolio and with your investments and to help keep you on track. Don't call them a mentor if you can't call them on the phone. If you can't call them and they can't call you, don't call them a mentor, because if you are going through something and you have to email your mentor and possibly wait a day for them to call you back, who knows what can happen to your account? Who knows like how urgent the situation may be? For the 5 mentors that I have in all areas of my life, I can call them on the phone right now, and they will either text me back or they will call me back. But I also know what time they go to bed. So if your mentor says, I go to bed at 11 and you have something that happens at midnight, don't be that person, because everybody needs boundaries. And they've set boundaries on their life for a reason. You should do the same thing. But anyway, we're going to talk about all that because it's going to help you be able to be a sound person in life, and just be very disciplined. Like, these things, while they sound, trivial, it's really helping to build discipline. Because the biggest thing in trading is not getting emotional and not just jumping into the market. We're going to be looking at how to get into the market. There's a specific way that you need to get into the market. With Forex, we look at time and price. With stocks, you are going to have to put 3 indicators on your chart, because these are indicators that hedge funds use to get to the market. Indicators for historical levels for when the markets or when a stock doesn't perform well, All of these indicators are going to tell you something super specific about the market and about price and how to get in. So while a lot of people might say you don't need the indicators for stocks, if you don't have them on your chart, you'll be blind, because trust me, I've seen the screens of hedge funds. They got them on there. It's just that the computer is automatically executing when the levels get hit or when these indicators get triggered, and a person doesn't necessarily have to do it. It's built into the algorithm. So I'm telling you right now, if you don't do it and you want to do it with your eye, you're probably going to miss. So anyway, we'll talk about all that stuff. It's already built out for you guys. I have some lessons. It's currently 3 lessons. We're going to cover all that information in. For you guys who got the questions that I sent in Telegram, there was like 6 or 7 of you. That's going to be lesson number 1. How to actually find your stock, why you want to invest, those types of things. So just knowing your why are you even trying to invest in the first place, and starting to do those beginner foundation level questions. So that's that for now. If you guys have any questions, save them to the end, and then just unmute yourself and ask me the questions, because I won't be able to like pick up my phone and read the questions tonight. But ask questions for sure, because I want to make sure that if you guys have questions or if you want something covered specifically, even if I already have it in a lesson, I'll just make sure that I write it down specifically because someone had a question about it. So you can ask me or tell me you want something covered tonight. So anyway, I'm gonna go ahead and turn it over to Mr. Levels. And like I said, if you got questions, just ask me at the end.
Cool deal. Appreciate that, Coleman. Drive safe out there on that road. Dropping that sauce as always. Give me a second. Share my screen so I can go over technicals. Cool deal. All right, jumping into technicals. Monday was a holiday. Midweek technicals. We know technically, today, this week was a short trading week. However, if you still want to play in the markets, here's what I'm looking at. So we're at we just retested a previous level, came up and retested this order block. And so we see we came back up, retested the levels perfectly. And now I want to see if we see the dollar retrace back down to retest previous structure and previous lows off of this level that we just hit, or if with time and price we break this level and get a retest and keep pushing to the upside to retest previous high. So we'll determine that through time and price. So with that being said, let's look at our currency pairs. Looking at Euro USD, seeing that the dollar is at that level, I want to see, we want to see if Euro USD hold this level. And with time and price, we'll be looking to see how London open. I got my eyes on these equal highs right here. They look real even, equal. So y'all know what sits above that, liquidity. So I would like to see this area of liquidity taken out, and this previous high retested, and then possibly for time and price when London markets open up, we may start to see markets start to sell off of this level to the upside. However, if market do push down, then I'll be looking for a reaction off of this imbalanced area here for price to then push up and then take out liquidity um, and retest this previous high. Same thing for GBP, NZD. I mean GBP USD. I want to see if we can hold this level that we're currently at. And if so, then I would like to see price come back up and retest this previous level here where we see these equal highs. Take that out. Mark that differently. Yeah. Or like I said, if we do push down, then I expect to see a reaction off of this area here, this imbalanced area here, and then push up to then take out this liquidity. Um, Looking at NZD, USD, same thing. See if we can hold this current level that we're at. Um, and if NZD do push to the upside, we'll probably see NZD come back up here and retest this previous high here at 0.7315. So moving on to metals, looking at silver, same thing. I mean, we already seen this level hit, so now we can just see if we can hold current level, um, push back up to give us the retest of this level here that we've been looking for. If not, if we do push below this level, then we'll be waiting for it to retest the structure, and then if we can't break back above the structure, then we'll look for price to come back down and retest previous low. Looking at gold, same thing. Want to see if we hold want to see if we hold current level. And if we do, we can expect to see gold come back up and retest 1835. But with this being so close for gold, this level of imbalance right here, you may see gold pop down in there and then pop back up. These equal lows, equal highs right here. It's fairly equal, real clean. So definitely want to see these taken out by the end of the week. So that's what I'm looking at for gold. With oil, we see oil is still pumping out this level we had here. We push straight through this level. Let me get that out of there, as a matter of fact. And I'm still expecting gold oil to come back up and retest 77 and keep pushing to the upside. And looking at U30, I want to see U30. See if U30 really, I want to see U30 push on down here. We got the retest of this level that I was targeting last week, and I told you guys Friday that I'm wanting to see the market come on down here and retest here and eventually here. We almost got there here with this push here, really close. So um, I'm pretty confident that if we can't get back above this high here, this area, then U30 should come down and retest these levels to the downside at 34,800, 34,790. And then once we get here, we should get a reaction off of this imbalance. And probably will see U30 come on back up to keep pushing to the upside. So with that being said, I'll stop the recording and take any questions.